In recent weeks, we have noticed increased volatility on financial markets. This raises the question whether the global economic environment is still strong enough to support financial markets in the future. Actually, as a matter of fact, the third quarter of 2018 has been a pretty good quarter. Especially the US economy outperformed compared to other advanced economies. At the same time, also other European economies did quite well in the third quarter. Think of Central and Eastern European economies, but also France and even Belgium did quite well in this third quarter. At the same time, we observe sentiment indicators that are deteriorating, and this is no surprise given the continued uncertainty surrounding Brexit and the trade war in particular. Generally speaking, we see that the sentiment among companies but also among households is weaker than a couple of months ago, and this is putting some downward pressure on the economy. Even in the US, you see some signs of slowing down. For example, we observe a substantial increase in inventories, and at the same time the job creation rate was relatively low in the latest figures. Nevertheless, generally speaking, there are still very strong signs in the economy. Investment growth as well as job creation remain strong throughout the global economy. Regarding the trade war, there is both positive and negative news. On the positive side, we noticed that the United States and China have decided to install a temporary ceasefire at the G20 summit in Argentina. During a 3-month period, they are going to negotiate all the difficult issues in their trade relationship. On the negative side, the CFO of Huawei has been arrested in Canada. Some advanced economies are expecting that technological firms from China are more and more interfering in their security systems. So we clearly notice that the trade war is becoming a technology war at this moment. Although the third quarter has been a pretty good quarter in general, it was surprisingly negative for some countries, in particular for Germany and for Italy. Italian growth became negative in the third quarter, and this is of course very bad news for the Italian economy. The state of the public finances in the Italian economy is so bad, and especially the conflict between the Italian government and the European Commission really necessitates growth in the Italian economy. Also in Germany, we have observed a negative growth figure in the third quarter. Now, this was very surprising for Germany, but also we are not very worried about this. In general, we expect that this is a very temporary fallback in the German economy, which is due to problems in the automotive industry. New emission regulations have been installed, and this necessitated some adaptations in the German automotive industry by launching and producing new car models. As a result, car registrations dropped substantially in Germany, but also outside Germany and other European markets. And this is, of course, very bad news for the economy, at least on a temporary basis. Generally speaking, we expect that these problems will disappear, and therefore we consider this as a temporary phenomenon. Another striking feature of the economic environment has been the declining oil price. The oil price declined in recent weeks after substantial upward price pressures in the months before. Generally speaking, we observe this oil price stabilization as the result of negotiations between the oil-producing countries. Generally speaking, this is good news for the inflation, because the inflation will come down again as oil prices come down, but this is a long-term phenomenon. In the shorter run, we expect the headline inflation to remain relatively high. The core inflation, particularly in Europe, remains strikingly very low, and this is of course bad news for the European Central Bank. Nevertheless, in the longer run, we expect that the core inflation will converge to the headline inflation, and they will approach the 2% target of the ECB in the longer run. This is very important because this allows the ECB to normalize its monetary policy. This month, a very important step in this normalization process will take place. The ECB will end its asset purchase programs, which is of course a very important sign to financial markets. It remains to be seen how financial markets are going to react to this ending of a very important period. To sum up, we still see many positive elements in the global economy that might also support financial markets in the future. At the same time, there is continued uncertainty, which is weighing on sentiment indicators. It remains to be seen to what extent risk factors will actually materialize in the near future. If they do, of course, this will lead to a further deterioration in sentiment and in the economic environment. Nevertheless, many factors might surprise on the positive side. In that sense, 2019 might become a very interesting year with positive surprises that could take place.